Welcome to Trading Lounge and the S&P 500 for the 19th of May, and starting with the S&P on the daily chart here. We've been counting, as you know, as wave 1 and 2 and 3 and 4 and up for 5 for wave 1 here. We were looking for an ABC pattern as an A and a B and a C. At first we were expecting it to come back to the 50-60% retracement level. We had noted before that all the retracements earlier in the trend had been quite shallow, so it was possible that we'd get a shallower retracement. The other point too is that if this was wave A here, it was rather short if there's any equality or ratio between wave A and wave C. Wave A was quite short, so I was kind of expecting wave C a probability that it may not pull all the way back down here. So we played both sides for that, and we can see now that it's moving higher through here. Let's go to the 4-hour chart here and take a look at this. So one of the things here that sort of haunts me a little bit is that normally when a market comes up to a major level, I know that you probably don't know that much about the levels, but it's normally, it's like when we're looking at this little structure here, this little 5-wave structure here, you can see how the top of wave 3 is at this level here, and then wave 4 will pull back here, and then wave 5 up. So as one of our members, Rick Blair, mentioned, that it may be possible that this ABC here being so shallow may be just a wave 4 here. And it kind of works okay, because if we take, even if we took this here, because we can count 1 and 2 and 3, 4, 5 here. So even if we took this low or this low here and put that up there, that would give us our 38.2% retracement level, pretty much sort of spot on here. We don't know if that's the case, but we're just going to keep it in mind, and I'm just going to put that in the background a little bit here, and we'll just keep our eye on that here. It will become apparent a little bit later on in this space here, but for the time being, we can expect to be counting 5 waves up through here. Maybe it'll come to the 3,100 or the 3,050. We'll have to see how that travels there. But in a way, in this bigger picture here, I'm kind of looking for a classic trading levels pattern across this space here. So the classic trading levels pattern would be this here. So the arrival, the reaction, the first high above the levels, and then this correction here. So we could look at that in 2 ways. We could look at this as the arrival here, and then the reaction here, and then the first high above the level here. And if this is wave 4 here, then that would make that wave 5 here, and then we would have a deeper correction at that point. Just move that out of the way a bit. So yeah, just going back to the daily chart here for a moment. In one way or another, we need support on this level here, right? So in this case here, as I just mentioned, would be would be looking for, let's just clear that there. So if we consider this the arrival here, and then this is the reaction here, then it would play out like this here: the arrival, the reaction, the 5 waves up for the first high above the level, and then a decent ABC correction. And then it may pull back to the 61.8%, but we'll see. But to go long again, to go from here up to 3,800 or 4 or whatever, we need this market to be sitting on the other side of the 3,000. So no matter what the wave count is, and it can be a guessing game, and sometimes we get it right, sometimes we get it wrong, but in terms of trading, it's like this little pattern here. We've got that first high above the level, then that becomes if the market plays out here as an ABC pattern here, we may be able to bring that down to the next level, and if it moves up there, then we can go long. So we don't get emotionally attached to anything here in this business. So we just wait for setups, and that's what we'll be looking for across here, no matter what occurs here. If this count here is correct, then it is possible that we won't see this big correction here we'll just see it's possible for this market just to, have a little bit of a dance across here, smallish dance, and then move and then just continue up in its third wave here. So that's possible as well. So we need to wait for this dance here, but we also must wait for some, smaller, tricky footwork to play out in this little area through here as well. So in a nutshell, you can see how this group 2 here is support here, 65, 72 and 80. That's the support for the market. And it's sitting on there. Now it's making a new high here, then that would be the time to go long. We're not going to go long right now into the 3,000. That's silly. We should already be long here above the 2,900 here and looking to take profit over, into this space here. The other thing that I want to mention, when we're working with any number, then we always drop to the next degree lower to look for support and resistance. So and above. So the group 1 here, which is 10, 20 and 30, and then this one here, which is 65, 72 and 80. So this is the swing range for anything to occur at this level here. And normally if we get support on top of group 1, well, then we can go long from that point. Of course we can get in there earlier, but I'm just saying. And then if this became the resistance here, then we'd be going further down there would be failure at that point. So it is this group 1 here and group 2 here that make this number sticky here, which is a major trading level 3 at this point. Okay, we're just going to move back into the intraday stuff here. So as I mentioned, we're looking for 5 waves up through here, and we're looking for the first high above the level. That will give us our reference point to go long. So I will be talking about support and resistance on this level a lot while this is going on, so I will be repeating myself. So on the hourly chart here, we can start to break this down a little bit. So it will look a little bit like this here. All I'm interested in this far is just going step by step. Okay, so I'm not interested in looking at 4,000 or anything like that. All I'm looking for is counting this 5 waves up and then looking for support on this number and then looking for a setup to go long again. The questions are, should you, if you're long already, should you just continue to stay long? I don't think so. I think it's always, and obviously I can be proved wrong, but 90% of the time we can expect some sort of dance across here, which is time consuming for CFD traders, which are paying compound interest daily, or futures markets that run out of time, or options and so on and so on. Big numbers like this, of course, the trading levels are fantastic for options trading, for burning time out and so on. But anyway, we're looking for 5 waves up here, so that's what we're looking for. So we'll see, we're going to break this down here, and we'll be looking for this wave 4 to pull back, and then wave 5 here. So because the extension is going to be in wave 3 here, we can look at wave 1 here and wave 5 being roughly the same, and that's why I put it up at well, I haven't put it anywhere, have I? So we'll put that up here at 3,100, but we're going to adjust that. And of course, between 3,000 and 100, we'll have all the levels in there as well. We'll have a subgroup 1, the midpoint at 50, and then subgroup 2 in here as well. The market's just hitting subgroup 2 in here at the moment. Between 900 and 3,000 is the 100 points. So we use the Fibonacci numbers 1, 2, and 3, 5, and 8. Breaking this down into the 15-minute chart here. So looking a bit like this here, not giving us much more detail, but we're certainly at the later stages of this wave 3 here. So I'll need to break it down into the tick chart here for this. Bring in a bit more data. Okay, so we've got wave 1 here and wave 2 here. We've been through that yesterday and the day before. And then we've got wave 1 here and wave 2 here. And from this green wave 3 here, from green wave 2 to green wave 3 here, I'll have to go back over this a little bit, but you don't have to worry. If you're looking for a target, it'll be 3,000. But looking at this is wave 1 here and 2 here, and then 1 here and 2 here and 3 here and 4 here and 5 here for wave 3. Wave 4 can pull back 38.2%. So roughly, and from there you'll have to adjust that yourself. And looking for 38.2% retracement level. So here we're looking for an A wave, a B wave, and a C wave coming back in here. So 2940 area here. It could pull back to the wave 4 of 1 lesser degree here as well. But either way, you really want to stay long for the 3,000 there. So once we get to the 38.2%, we'll be pushing up here for wave 3, 4, and 5. And also too, just want to point out that you see how small wave 1 is here compared to wave 3? That will make this wave 5 here like quite short in this instance. This may be down somewhat here, I'm not quite sure. We'll just lift it up a little bit there, but so there's a bit of a lot of wave sort of forced to play out in this, in this section here. So in each trend there's a beginning, a middle, and an end, and obviously that right in the middle here, the third of the third of the third is the middle, and obviously we're getting waves 3s and 4s coming in towards the end here for this. Alrighty, well that's about it at this stage for this, so I'll call it off. Thanks for tuning in and thanks for your support, well appreciated. Cheers.